We have a little bit of a different video today. A little bit. It's not as much Bitcoin focused and just a nice potpourri of stuff. And this is going to be pretty fun. I'm excited. I hope you're excited. And before we take a look at all this stuff, do me a favor, hit that like button, turn on the subscribe button, and I don't know, leave a comment in the comment section, all for the algorithm. So first three posts focus on the DXY. If you are unfamiliar with the significance of the DXY, this is the tool that I used to call the bottom in 2022. This is the major inverse correlator to the Bitcoin, crypto markets, to perhaps the stock market, all of that, because people are fleeing out of the dollar. It's a sign of potentially more risk on activity, more of an irrational pump in the markets, all that. It's dollar weakness, which means that things valued in dollars tend to go up. And we have from Lynn Alden here, the highly sophisticated and technical term for today's dollar index move is that it has entered, quote, the fun zone, or the quote fun zone, end quote, excuse me. So below 98, I saw that as something worth talking about. Below 98, this is a significant thing. And every major move in Bitcoin's history, every parabolic move in Bitcoin's history has been accompanied by an accompanying move down in the DXY. Look at it. Just look up the DXY and compare it to the 2021 peak, the 2017 peak, the 2013 peak. We have some more analysis here. My favorite chart heading in the right direction, perfectly on time. DXY, Donnie, he says, I'm so bullish that I have physical pain in my body. I'm struggling to sleep at night. Get the DXY below 97.8. I think I need to be rushed to a hospital. Okay, you're quite animated. But DXY, now some actual analysis on the DXY from Gert Van Lagen. I'm going to warn you, permeable, but there's always some stuff on his charts that I find interesting. So DXY two week DXY, the bearish engulfing expanding triangle I've been tracking for months is now in full effect. Monthly close below the July 23 low. Confirm the bearish breakout. Expect swift continuation here. You can see move down from September 2022 to July 2023, and then an expanding triangle. Oh my. And then, man, the last few months for the DXY, very, very low, very low. And a breakdown of that. So what's the target from Gert Van Langen? We're looking at 91. A move down to 91. That sounds pretty interesting. So we'll see where we go from here and how far markets go up or down or sideways, all of that. Now, a couple of bits of news with Bitcoin spread throughout this video. So first of all, public gold miner Bluebird just announced they will start to mine Bitcoin. They sell their gold to buy Bitcoin. Huge fire. Okay, that's interesting. I'm not saying that this is... I'm not going to go as far as the Bitcoin historian and say, oh, they're selling their gold to buy Bitcoin, but a gold miner, historic gold miner, is getting into the Bitcoin sphere. And what do we take from that? I mean, they're going to do what they are going to do to be profitable. And if a company like Bluebird is seeing the potential for profit, for increased profit, by over potentially mining gold, even though gold is super high right now, has gotten above 3,500. Well, that's something to take note of. Okay, so they're going to start to mine Bitcoin. Huge! Something to take note of. 98.68% of Bitcoin addresses are in profit, and market sentiment is very bullish. Okay, Bitcoin is on the verge of breaking its all-time highs, fueling optimism and excitement across the crypto space. Only a tiny fraction of addresses are at a loss, mostly those who bought above 108K. As we approach 100% of addresses in profit, social sentiment and crypto news become even more euphoric. Access alpha metrics at alpharactal.com. I post a lot of alpharactal and Zhao and stuff. And so here's the thing, a couple things I wanted to point out from this that I find to be very interesting. So you can see the percentage of addresses in profit versus loss, and how, look at, if you want to talk about diminishing returns or whatever, look at the decline. You could draw a trend line from 2012 all the way to where we are today. And it's a sign of something, percentage of addresses in loss at the bottom in 2012 was over 80%. In 2015, 2016, there was a point, around 80%. In 2018, 2019, we're down to 60%. And at the COVID crash, 60%. Bear market bottom in 2022, that was under 50%. And so what does the next bear market look like? You could make a logical argument that perhaps that percentage would go up to something like maybe 40%, 35%, maybe something like that. I mean, we'll see. We've spent a long time here with addresses in loss not being all that much. So we're entering a phase of just gradual expansion. Maybe there's another chart in this thread here that we'll be looking at that we'll see. So I hope you see what I'm talking about with this takeaway. That's really interesting to look at here. So death of CAB to QE. Markets tend to do what's least expected. I am not endorsing this, but I shared a chart that looked exactly like this yesterday. 4-year cycle, boom, big spike up, parabolic run up in 2013, big parabolic run up in 2017, less of a parabolic run up, but still very exciting times in 2021. And here we are now. I talked about this in yesterday's video. A structured cycle, the ETF cycle, the cycle where in 2026 and 2027 there will be more Bitcoin accumulation than perhaps in 2025. And could that lead to a so-called super cycle? Okay, again, I'm not endorsing that. I'm not a believer in that. I am of the mindset that it's not entirely out of the realm of possibility. That's all I want to say. What percentage chance would I give it? Maybe like a 10% chance. But this is a reason that I'm kind of nibbling away at Bitcoin at a time that I would have never in my life expected to be nibbling away at Bitcoin over $100,000. And here I am, I'm still buying Bitcoin. What in the world? All right, let's move on. So Coinbase partners with American Express to launch Coinbase One Card, offering up to 4% Bitcoin back on all purchases. That's, listen, guys, I talked about Gemini. Yeah, I see a comment here, fitty.eth. Gemini is doing the same. I've talked about my Gemini card. I love it on my X account here. 4% back on gasoline purchases, 3% back on grocery purchases. Restaurant, 3% back on restaurant purchases, 2% back on grocery purchases. If you're interested in the Gemini card, could you please comment on this video, and I will send you a link, because I have 4 referrals. I get $50 each per referral, but then the 5th referral gets me $200. And excuse me, you'll get also $50. So it's not just, I'm not the only one benefiting here. But could you be my 5th referral? I'm begging you. And then every 5th referral gets another $200. And so you could refer people and get $50, and then maybe you refer a 5th person, you get $200. I'm getting it all in Bitcoin, and I'm getting my cash back in Bitcoin. You could choose whatever you want. You could choose Ethereum, you could choose some junk coin, but for me, I'm perfectly fine stacking sats this way and just holding on to it for a very long time. So cool that Coinbase is doing that. Send me a message if you're interested in the Gemini card, or just comment in the video. All right, so Quentin, link JP Morgan, Ondo Finance. This is really interesting infographic. So we have Ondo, a crypto that I have high hopes for. One of the big advancement in DeFi. I like Pendle more, but major advancement in DeFi. Also trying to bring treasuries to the blockchain, which is a multi-trillion-dollar industry. And if there's ever a time that it was desperately needed for the blockchain to have treasury exposure, it would be now, given where the bond market is. Bond market's really scary right now. But we have Ondo, traditional transactional initiation into Ondo, and then they use Chainlink for what Chainlink is utilized for in Oracle. Bringing that, connecting interoperability, certain buzzwords, connecting that to the real world, a private blockchain with Connexus by JP Morgan. There's potential there. There's potential for Ondo and Chainlink. There's potential for, Lord willing, the bond market not imploding. As the bond market's probably going to implode, and I'm terrified about that. But that's not. I don't think that's all that anytime soon ish. Not 2025. Hopefully not 2026. But we'll see. Something that interesting. Okay. Danielle Meme Quant breaking. The meme coin casino is now run by DeFi, DEFAI. Starting next week, Hey Anon will autonomously launch coins on Arena, an Avalanche social fly platform. So interact with Hey Anon tweets, tag us, whatever, blah, blah, blah. You might trigger a launch. The AI picks the name, the narrative, the moment. If it's you, you get 1% of the supply instantly. Oh, wow. I didn't read that part. This is not hype. It's a new era. It started in the trenches. It started on chain. It started with Hey Anon. Turn notifications on. Let the games begin. I pointed out in a video, I think it was last week, something that has Avalanche on my radar is within the last month, meme coins launched on the Arena app have reached a $100 million market cap. And so this is interesting. I don't know entirely what to make of this, aside from it's another thing that, Avalanche adoption. Are we actually going to see some Avalanche adoption? We've seen plenty of Sui adoption, plenty of Ethereum adoption, obviously plenty of Solana adoption where real world, just general people are using these blockchains. We haven't seen that nearly as much with Avalanche. This is on my radar. And my goodness, now we're at a point where AI is launching meme coins. Okay, all right, kind of interesting. Another thing that I find kind of interesting, okay, here's a thesis that I've never really considered. I just never really gave it all that much attention, but let's see what we have from income sharks here. So Coinbase, their stock. Called it last time, calling it again. I think they're losing market share, pushing away users, and their business model relies on altcoins, which have been very flat. Bullish on crypto and bullish on DEXs, not Coinbase. This is why they are desperately adding memes. And what do we have here? I mean, you can see, look at this. Bitcoin hit a new all-time high in May, got above 112, and look at how much lower Coinbase is than Bitcoin itself. All-time high in December, 108, was the peak for Coinbase for this cycle at least. And then you can see just looking at this chart right now, this is not something that I would be too excited about owning, even if Bitcoin goes up to $200,000, $250,000. Yeah, Coinbase will do well, but it probably underperform. So I think income sharks is on the nose here. So I'm curious about this old tweet from February 12th. You can see exactly where he tweeted it. Let's see. Coin probably does well on earnings tomorrow with such a bullish Q4. However, markets are already going to look at Q1 and see that it won't be sustainable. Thinking Coinbase is heading lower to this gap, even if I think crypto starts doing well. I think Coinbase has competition. All right. Yeah, looks like something that I would not want to invest in. I've never bought Coinbase. Interesting stuff here. So from Santiment, these are the projects with the highest rises in whale transactions this week compared to last week. Among non-stable coins, expect high likelihoods of price reversals and volatility among this group. We have ENS. I've seen ENS look pretty bullish. Compound, seen a big spike up in Compound, which actually would have scared me away from it if I were interested in buying it. Virtuals, I have some virtual. DAI, USDC, those are both stable coins. Mantle, OKB, USDC, obviously on Optimism, stablecoin. Wrapped Ethereum, okay, on Polygon, and SPX 6900. If you have not looked at the SPX 6900 chart, my goodness, wow, okay. There's a lot of, it's a very bullish chart. Now I am wondering if it's going to put in a huge cup and handle. And so if it does, maybe you buy the bottom of the handle, but not right now. Not financial advice. Lastly, something that might interest only me, but so we have a tweet from Matt Walsh, a very outspoken conservative guy here. Americans won't do these jobs, quote, BS. They won't be your slave labor. That's the issue here. There are plenty of Americans able and willing to work on a farm. They just won't do it for 50 cents an hour or whatever you're paying your army of illegals who can't speak English. And then this is the thing that I found pretty interesting. The chart here, this is 100% correct. Since 2000, the real purchasing power of the average hourly wage has fallen by over 80%. Since 2000? Oh my goodness. I had my first job, got my first paying job in 1998. And was it 1998? Yeah, 1998. No, 1997, whatever, it doesn't matter. My pay was $5.25 an hour. So, okay, purchasing power has fallen by over 80%. I guess I was rolling the dough back then. I mean, for me, 525, even though it was only 10%, 10 cents above minimum wage, that was pretty big. But this is due in part to the meteoric rise in the supply of low-skilled labor and a labor supply-demand imbalance. Wages are the release valve. Pay Americans more, period. So 80% in the value of gold per hour at least. Okay, yeah, sure. But, I've seen videos talking about this, how people are complaining Gen Z doesn't want to work. I'm happy I'm not Gen Z. Sorry, Gen Z people. Gen Z doesn't want to work, right? So, well, they're aware of the scam in front of them. So, except my daughter, she really is excited about getting a job. And she's 13, so obviously that would be the case. So, hey, that's it for today. I hope you have a wonderful rest of your day and a wonderful weekend. And all of that, let's ride this. There's plenty of reasons to be bullish. I'm long enough. Short term, there's noise, but I'm seeing. I personally have a lot of reasons to be confident in this market, and let's see where we go from here. All right. Anyway, that's all I have for today. I hope you have a wonderful day, a wonderful rest of your weekend. I will see you in another video. Peace.